Hello and welcome to today's Fat Tail Daily video. Now today we're doing something a little bit different. Callum Newman, our small cap editor, is the guy that wrote today's article, but he's actually in Spain right now, and right now it's around 1:37 a.m. in the morning, and I know the Spanish like to finish the day late, but I think this is slightly too late for even Callum. But anyway, I am joined by Brian Chew and James Cooper. Welcome, guys.
Hey, Woody.
Thanks, Woody.
Thanks for jumping on. Now, we're going to be discussing the ideas in Callum's piece because it's all about the lithium sector. And I wanted to get you guys on because, Brian, you obviously have a lot to contribute in terms of the supply-demand dynamics, because obviously you look at the gold market, but I think similar things can be relayed. And then, James, you're our resident geo. So let's just talk about it because Callum wrote the article and in almost a prophetic way. He said, is this, basically he's posing the question, is this a massive buying opportunity in the lithium sector? Because up until now, lithium stocks have been absolutely decimated across the board. Developers and explorers, I think they're down at one point, like up to 90% on average. Today we wake up and there's been a big rebound in a few of the explorer stocks. So it's quite a prophetic piece from Callum. But let's just start with you, Brian. Can you give us any insight into the dynamics going on? Because I know that there's a few parallels between the lithium market downturn and previous commodity cycles, such as iron ore and gold and everything like that. Can you give us some thoughts on how you see this situation playing?
So going back to about 2016, 2017, lithium started getting a lot of attention, media attention, as there were talks of battery metal technology, and all these companies started to explore for lithium. There were a few companies that had lithium deposits that basically got significant traction from the investment market. I could still remember Galaxy Metals back in 2016, 2017, because my wife actually bought those shares, and it suddenly rocketed up because they had a deposit which was in advanced stages, and they were going to bring it to production. Now, Galaxy Metals, or was it Galaxy Resources? Correct me if I'm wrong. Eventually, I think renamed themselves to Orocobre, and it's taken over by Orocobre, and then they merged with Allkem a year or two ago, and it's now a major lithium producer. Now, going into 2020 and 2021, the whole lithium story and the whole green agenda just went bananas. There were talks of electric vehicles replacing our normal petrol and diesel vehicles. You had talks of batteries, solar panels replacing solar energy, wind farms replacing our current grid by hopefully 2030. Now they've moved it back to 2050. And you need a lot of batteries in order to store the energy from the sun and also from the forces of nature. Now, with every major boom will come a bust. And furthermore, with the illogical approach that the governments and these international think tanks talk of trying to get rid of fossil fuels before they've established clean energy, costs of energy have gone up, and political parties that supported this green agenda now have to backpedal in order to not get voted out of government. They've got to accept gas, they've got to accept nuclear, and with car manufacturing companies that have thought of moving to electric vehicles and completely transitioning away from petrol and diesel-driven cars, what's happened to them? Most companies have actually walked back on that as well, and with that, the demand for lithium is completely dwarfed by the massive lithium supply that's entered the market simply because of this 6 to 7 year push towards what they call net zero. And here we are. We've seen lithium prices, I think, fall 85% from their peak. And even the larger producers now are hitting a brick wall with rising costs, lower lithium prices, but they have to keep the mill running. Otherwise, if they actually stop producing, it takes them 6 to 12 months to restart. So most of them are facing losses, but they still have to keep running. And we have to watch a few of these companies shut down their processing plants, cut back lithium supply. Hopefully that might see the lithium price recover. But where exactly are we? We don't know. And that's where Cal actually jumped in and say, this might be a good opportunity to get in. I would say he probably meant to get in slowly rather than plunge in headfirst.
Of course, yeah. James, from a geo's point of view, and someone that's been in mining companies for many years, is this what's your take on the lithium sector? Is this a case of just a huge supply glut, and then the macro picture of the reason why they up that supply changing?
Yeah, so I think it's important to remember that lithium is still a really young commodity. So we don't really know how it plays out on a cyclical sort of long-term basis. But how I see lithium is, I guess, how the commodities were back in 2016, so industrial commodities. And this is really the 2016 moment for lithium, so potentially getting close to a major sort of cyclical low for the lithium market. So that's when things like copper, iron ore, so all these industrial metals really hit a major low point, a multi-decade low point in their sort of price trajectory. So I think we could be approaching that point with lithium. It still could be a little bit early. I think if you look at some of these charts for miners, explorers, developers, it's very bearish. So you look at the downtrends happening. So getting in at this point, I think you do run that risk of trying to catch that falling knife of a stock that's in sharp decline. Mm-hmm. I would, from an investor's point of view, I would probably, as Cal suggested and Brian suggested, probably approach this market carefully. Certainly not pour in. Accumulate just quality stocks on a watch list. I think that's what you should be doing right now. And that's what you have in a bear market. You have the pick of the best stocks at heavily discounted prices. So that's what investors should be utilizing, and sort of trying to figure that out, which stocks could perform best when the recovery comes along.
Can you suggest any ways for investors to actually identify those picks? Because and would you because if you're looking at solely lithium producers, they're probably finding their operations quite expensive right now.
Yeah, so
how can you tell one quality company from,
Yeah, so I think you definitely look at grade. So high grade is usually the most obvious point of reference of what is going to be a more profitable company. But as well as that, you'd need scale as well. So you need big projects. So in terms of developers, Liontown is one of those companies with a really big project, relatively high grade. That's why it was quite popular last year. But obviously all that sentiment has fallen away now. That's one project that Kathleen Valley that investors could look at in this sort of market. On the other sort of spectrum, in terms of explorers, I probably wouldn't be looking at explorers right now, just because it's hard to give any weight to sort of a company that's only just sort of maybe developing a resource and is trading at a sort of a discount that is similar to some of the developers who have a known deposit, so you're not taking on that additional risk.
Yeah, right.
So I would be probably focusing more on quality developers and producers in this sort of market for adding to a watch list. As well as that, I think Brian touched on Arcadium. So that's the company that sort of merged with these different companies, including the US-based Levent last year. So that's just a company that has gradually sort of developed several projects. What's interesting about this company is it's one of the only companies that offers processing outside China. So that's sort of a rare feature among the lithium miners. So just having that downstream capacity of converting spodumene or lithium brines into sort of that refined product for the battery makers. So I think this is the sort of market where you can sort of get those unique opportunities, and those would be sort of my top picks in this sort of bearish market.
Thanks, James. Brian, from a psychological point of view, could you kind of relate this time to back in, I don't know, 2013 when you first started looking at the gold sector? But although they're different markets in terms of resources and commodities and have different uses and all this sorts of things, I guess the investor psychology is the same. Is there any words of wisdom that you could offer in that respect?
That's a really good question. And words of wisdom I can offer, firstly, is this is not financial advice, and do your own research. But from that, given how brutal the market has been for lithium, it is similar in many ways to the gold stocks in 2013 to 2014, when gold also fell about 70, 80. When gold stocks, even the largest producers, fell 70, 80% within a year and a half. And by the end of it, most people would have thrown in the towel. Now, the reason why some people throw in the towel is when they were catching a falling knife. So they were plunging headfirst into a market thinking, oh, this is really cheap. And it's going to be a V-shaped bounce. And therefore I'm going to get rich. That was one of the things that I experienced myself when I bought into gold stocks in a big way from July 2013, thinking that it was a V-shaped recovery. Turned out not to be. It turned out to be a U-shaped recovery. Fortunately, at that time, I was still living at home. I had a pretty good income from teaching in university, so I could continue to dollar cost average. But in hindsight, it would have been better for me to go in slower, and as James suggested, buy the good quality producers, be more discerning about the companies that I buy, and pay attention to where the prices are, and don't expect a V-shaped recovery with commodity prices, simply because commodities can trade well out of there's what we may call intrinsic value because of government policies and investor funding, where the investors' funds actually flow. It takes longer than you expect for recovery, and when it goes up or down, it can overshoot. So the larger companies, the producers, if you buy the good quality ones, they'll probably fall less. They'll also recover earlier. The explorers are going to be much later in catching up, and a lot of these companies, especially explorers, they don't make any income, so they will keep raising capital to fund their drilling, their operations, and paying their staff members. So even if the price of the commodity recovers, they've diluted their share capital by quite a lot. And as it came down, going back up, they've actually got a bigger weight to in that back to carry. So they're going to recover slower than you would expect. And you also require them to make a very good discovery or two in order to convince the investors to come back to those companies. So, in short, these bounces, you got to actually wait a few days, wait a few weeks even, to confirm that the worst is behind them. And I can assure you one thing is there will be many false rallies in the commodity space with mining stocks. It happened with gold. Those who are familiar with gold stocks the last 2.5 years, we jumped at the shadows on several occasions. And the only reason why many of us who haven't thrown in the towel haven't done so is because we haven't jumped in head first. Same thing that I would suggest people do with lithium stocks. Start with a good quality, buy a little, and with the explorers, be very, very cautious.
And I guess it comes back to the same thing as we talk about regularly in these videos. It's knowing what you're buying. James, is there any final words you can say on the bigger picture for the lithium market? Because I know Brian touched at the start that the future of renewables has taken a little bit of a hit, potentially. And will that affect supply and demand dynamics for that sector?
Yeah, absolutely. So demand is always going to be a big factor for lithium. But I guess just back on the supply side, so geologically speaking, with lithium, it doesn't tend to have the same, I guess, supply constraints as you might see for other commodities like copper or gold, because it is relatively abundant. I did note that sort of back in 2022 with the big lithium boom going on, that there are different sources of lithium. So you have your hard rock spodumene, you have lithium brines mostly in Argentina, Chile. So, and you've got other sort of technological innovations as well, developing new ways of sourcing lithium. So there's companies tapping into old oil fields and accessing lithium brines that way. So I think in terms of the scarcity factor, it just doesn't give the commodity as much support as you might see for other metals. So I guess that's an added risk for the lithium market, that we might see further falls. So again, something to be cautious of. But it does take me back to that whole thing where maybe focusing on the companies that have that downstream processing capacity. So Arcadium with processing that's happening outside China, so giving this alternative supply chain in this sort of geopolitical fragmented world. I think that's probably the best solution of looking for these companies that are able to offer something a little bit unique in the lithium market. I think is one of the good strategies.
Good stuff. All right, guys, we'll leave it there today. We've covered a few things in the absence of the author of the piece itself. Guys, if you would like to, Callum's actually pretty bullish, so it's a nice other opinion. I guess it depends on which stocks you're looking at too, of course. But thanks for your insights and your perspectives. We'll get Callum on camera when he's back in Australia at some point in the next week or two, and to get his take on it. But if you'd like to read his piece, I've provided a link below direct. It's absolutely free. Go to our Fat Tail Daily website. There's a link below, and there's also a link to a sign-up page. And of course, if you haven't subscribed yet to our YouTube channel, do so that as well. James, Brian, thanks for your time. We'll see you again very soon.
Thanks very much, and God bless.
Thanks, Woody. Cheers.